Hey guys, so in today's video, we're going to be breaking down this 1 to 1.3 risk to reward trade that I took on Bitcoin just last week. Now, this trade may be $1,500, and I'm going to be giving you a full top-down analysis of breaking it down from the higher time frames all the way to the lower time frames to show you exactly how I got to the execution of this trade. So let's dive straight into it. First and foremost, we're going to come up to the higher time frame, and we're going to understand where we are in terms of our structure. So as we're all aware, Bitcoin has just been on a parabolic run over the last few weeks and months, and we've just had this massive push to the upside. Now, this strategy can be used on all different instruments. It's not specific to Bitcoin. However, I've been having a whole load of success using supply and demand to break down Bitcoin price action and extract profits from the market. So understanding where we are in terms of structure is relatively simple. We can see that this is our higher high, higher low, and we've just put in a brand new higher high. That means price is now coming down to give us a brand new high low before it continues pushing to the upside. Now, with Bitcoin, you have to understand in cryptocurrencies as a whole, there's a lot more that goes to it than just price action. You have to factor in all of the geopolitical news around the world, the cycles, the bull and bear cycles. There's so many things that go into crypto. However, on the core basis, there is simple market structure, which we can still use to extract profits. Now, if you guys do struggle with any of the concepts that I mentioned in this video, whether that be market structure, whether that be the execution, anything, then I would highly recommend you click that link down in the description, because inside of my VIP group, I will teach you everything you need to know in order to become a consistently profitable trader, from concepts such as liquidity, fair value gaps, order blocks, order flow, premium versus discount, different entry schematics, different trading strategies, trade breakdowns, and also giving you a road to profitability, which you can use to become a consistently profitable trader in 2025. But once you've understood where you are in terms of your higher time frame structure, we know that we are bullish and we're just coming down to put in a higher low retracement. Once we've understood that, we can now start cycling down onto the time frames. So coming over to the 4-hourly, this is where expectational order flow is going to play a big role in your understanding of the markets. So first and foremost, what can we see? The daily is bullish. Yes, we understand this is a higher high. However, on the 4-hourly, we can see that we've had a market structure shift right here and price has flipped bearish. Now, this is expected because in expectational order flow, the lower time frames have to flip bearish in order for the higher time frame to give us that retracement down, right? So having understood that, the 4-hourly has flipped bearish and we can see that we've put in a lower low, lower high, lower low, and the price had just come up and put in this lower high right here, tapped into this fair value gap, and now it's pushing to the downside. So we understand that the higher time frame is bullish. However, the lower time frames are currently bearish and they are putting in a retracement on the higher time frames. Once we've understood that, we can start cycling down on the time frames, and before we do that, let's identify the key areas where price is bouncing off of so that we can stay in line with structure. So here we have the 4-hourly fair value gap, which price reacted off and is now giving us a push down. Now, on the daily, we can see that our last point of demand, or our most recent high low, is right here. Therefore, this is now our trading range. Anything that happens in between this trade is just a simple, complex pullback, and it isn't going to change the higher time frame direction of the market. Now, having understood that, we can now go to the hourly time frame, and this is where we can start to look for trading setups. Well, because the high time frame is bullish, but we're on a retracement to the downside, we can take short positions, even though it's counter trend to the higher time frame, based off of the fact that we are following expectational order flow. Now, what is expectational order flow doing at the moment? Well, the lower time frames are simply putting in bearish market structure. We've got a lower high, lower low, lower high, lower low. So with that understanding that the lower time frames are giving us bearish market structure, we can start to look for a short position. So let's simply just follow market structure. We've got a lower low, lower high, and if we let this play out, we can see that this is now a lower high and this is our lower low. So once we understand that this is where we are in terms of our structure, what we can now do is drop down to the lower time frames and we can start to frame up a trade. Well, following expectational order flow, after we get a lower low, what do we expect? We expect to see a lower high and then a continuation lower. Simple market structure, right? We get lower low, lower high, lower low. So once we've understood this, where can we identify key areas that price can potentially retrace to? Now, this is where you can use multiple different things to identify where the markets might potentially retrace to. You can use things such as a Fibonacci, where you can take it from the highest swing point to the lowest swing point and try and figure out potentially the market will retrace back to the 61.8, potentially it will go higher, potentially it will go lower. And then you can start to couple that up with inefficiencies in the market. Well, what can we see right here? We've got this massive fair value gap that lines up with the 61.8 fib level and is also an inefficiency in the market. And not only that, but if we look to the left, then what we can also see is that we've also got a breaker block that lines up with this inefficiency that is also sitting on the 61.8 key level. So all of this indicates to us that this is a very highly likely area that price is going to retrace back into, and then we can potentially take a continuation of the lower time frame trend right here. Now, once we've understood where we're potentially going to be entering from, we also have to keep in mind that we have to identify targets because the exit is just as important as the entry. So let's go back over here and look at what this price action is doing. Well, first and foremost, we can see that right here we've got all of this liquidity sat below this low. Now, price can very well target this liquidity because below this low, there's going to be a bunch of orders, potentially stop losses, potentially buy limits, sell stops. There's going to be a bunch of orders below this low. So that is our case of liquidity right there. But apart from that, we've also got this inefficiency right here, and we've also got an inefficiency right here. Now, both of these can definitely be key targets for price. So what I like to do is take profits as early or as quickly as possible so that I am risk-free on the trade, and then we can let the trade run for wherever it wants to go to. So now that we've identified that the price can potentially come to this inefficiency, this right here, and also target this liquidity, we've got our targets, we've got our entry. So once we've done all of that hard work, what we're going to do is we're going to take our entry at the open of this fair value gap. We're going to put our stop loss just above this swing high right here. So this is our lower high. And if price breaks above this, then it completely invalidates the entire trend switch into bullish, which means that this trade is no longer valid. So we're going to put our stop loss just above this swing high right here. And then, as I said, we're going to target first and foremost this fair value gap right here because that is our very closest target that price can go to. And then after that, we've got the inefficiency just below it. And then we've got the liquidity that's sat right below it too. But for now, I'm just going to be targeting this fair value gap right here. Then I'm going to take some profits off the table, go break even, and then we can let the trade run. So once we've done all of that hard work, we're then going to enter this trade into our system. And then from there, we're just going to wait to see what price does. As we can see, price then comes up, tags us into this trade, and then it starts to dump straight towards that target that we identified, which was the inefficiency. So by now, once we've got down to here, we're at 15% profit if you're using 10x leverage. It can be more if you're using more leverage, less if you're using no leverage. And then based off of that, we've now taken our profits. We've also gone break even. We've took money off of the table. And now we're just going to let price do whatever it wants to. As we can see, price tried to break below this low and it failed. And then it tried to go below this low again. And then we're having all of these indications that price is no longer looking to go lower because we've got this that's telling us price doesn't want to go lower. Another wick, another wick, another wick. We've got multiple rejections from this area, and price is telling us I no longer want to go lower. So I've now closed out my position and we've banked $1,500. So it's nice and simple understanding where we are in terms of the higher time frame bias, all of the market structure, expectational order flow. Once we understand all of that, we can frame up these nice and simple trades. And again, if you do struggle with any of these concepts, click that link down in the description, become part of the community, and I'll teach you everything that you need to know in order to become a consistently profitable trader. But on that note, if you guys did enjoy this video, then don't forget to leave a like, comment, and subscribe, and I'll catch you guys in the next video.